Diversification is for idiots, says Warren Buffett and the late Charlie Munger.
Diversification is for the know-nothing investor. It's not for the professional.
And there's nothing wrong with the know-nothing investor practicing it. It's exactly what they should practice. It's exactly what a good professional investor should not practice.
And yet I'm going to tell you why, if you're not diversifying, not just within stocks, but on a very macro level, you could very well get left behind, and as history tells us, could even be bankrupted. Here's the thing I think Warren Buffett and others like him miss when they say, don't diversify. First of all, and by the way, I love Warren Buffett. I listen to what he says. I respect him. He's obviously very accomplished. I follow some of his advice. But I never understood, first of all, how Berkshire Hathaway, which is a collection of companies, you might own only Berkshire Hathaway stock, but that stock owns a collection of companies. I also happen to own one stock as a main holding going forward, and that's called Nomad Capitalist. We are a business. We are a growing business, and I have a portfolio of lots of stuff that protects me at the core. But as I grow, sure, I'm focused on one thing. But I think that the other thing that's being missed by people like Warren Buffett is the idea that the country can change. And if you're Warren Buffett and you started investing in stocks during World War II, at a time when he says it didn't look so good for the U.S., you have to have a tremendous confidence in your country, which I suppose during a patriotic time like World War II, or any of the good decades that came after that for the U.S., when the U.S. was relatively unrivaled in terms of anything, quite frankly, you might have this idea that, hey, just keep all your money in one country and you'll be safe. And people in the United States certainly feel like that. I imagine many people in Western countries feel like that. Even people in many Latin American countries think that maybe not about their own country, but hey, I'll go and open a bank account and a trading account and I'll buy real estate in Miami and that will keep me safe. And people put all their eggs in one basket. And if the world's increasingly multipolar, you're seeing countries that are deciding, you know what, we don't like the U.S. We don't want businesses that are based in the U.S., all kinds of things. And you might say, well, who cares? I don't want to do business in those places. I don't want to have my money in those places. But as the U.S. shrinks in terms of its world reserve currency status, in terms of its relevance geopolitically, it's going to become nastier and nastier. And I don't want to have all my money in a country that is increasingly nastier. So Warren Buffett obviously owns many different stocks in a certain way. And so the bottom line is that the world today is different than Warren Buffett's United States. You want to diversify for one reason: geographical risk. I'm not a stock picker. If you want to own one stock, you're certainly welcome to do that. But I think that geographical diversification, where you have some money in one country, maybe that's the country where you live, that's fine. But we've seen throughout history, countries come in, they need to plug holes in the deficit, they want to pay off the debt, they want, for social reasons, to come in and take some of your money. They promise they'll pay it back sometimes, others they don't. They usually don't. Other times they just raise taxes. Obviously, in some countries, we've seen, just in very recent times, very high inflation. It was worse in some places than others. That's a form of taxation. And so if your money's all in one place, look at what happened to the pound against the U.S. dollar. Look at what happened to any number of different currencies against the U.S. dollar, the last year or two. Now, if you were in the Mexican peso or the Georgian lari or the Armenian dram, some of the currencies that I hold, you did very well against the U.S. dollar. But if you're an Australian, all your money's in Australian dollars, you're at a disadvantage. Sure, you can probably get a multi-currency account in some of those countries. More difficult in the U.S. But what happens when the government wants to, again, take more of your money for certain things? And what I've seen in the last 25 years that I think Warren Buffett understands because he doesn't mind, but that you probably do, and I certainly do, is the fact that some of these fringe proposals of like having a maximum wage or having a wealth tax or just taking people's money, there's more people now than ever at a time when Western countries just aren't as strong. You can't just go out and get a great job with a high school diploma and have 5 kids and have a big house and have 3 cars and have a nice life. That's harder now because there's competition. And so you have more people now being like, hey, if you can't live on $200,000, you can go screw off. Well, that impacts the culture. I think you need diversification to protect yourself from that kind of cultural shift. And so when you go to countries, we've talked about Mexico and why I'm buying Mexican stocks. We've talked about Malaysia and why I live there and why I think it's a good, welcoming place. Those places are on the upswing, as are dozens of other countries. Look at the economic freedom rankings or just go there and feel it, as I do. as our clients do. And you will see that there are places where people are optimistic. And when people are optimistic and their wages are going up and their opportunities are going up and they're happy about the country, you're seeing people come back to some of the countries we talk about. People are going back to El Salvador. We had Max Kaiser at Nomad Capitalist Live a couple of years ago, our annual event. He said he talks to people who lived in Los Angeles, lived in California in the U.S. They're seeing the changes in El Salvador. They're going back. They'd like to live in their own country. They're wanting opportunities. If there are now, they're going to go there. And I think being able to access some of those markets is a good thing, because the U.S., for example, has $30-some trillion in debt. You saw Joe Biden not so long ago. Let's spend $7.5 trillion this year. No, whether that gets through or not, that's just the general trend. Other Western countries aren't much better. The numbers are a little smaller. You know, I'd be less worried if I was a Singaporean keeping my money in Singapore. And yet, you know what? We've had Singaporeans who've hired us who said, I don't entirely trust this place for whatever reasons. I think that's a healthy skepticism. One of the things that I like meeting people all around the world is a lot of them have a healthy skepticism about their government. Why would you want to pay so much in tax, they say? Why would 43%, 48% in some of these Western countries? For what? They're a bunch of crooks, because that's what they have. It's not that much different where you live. And so I think understanding that this kind of long-term dogma, this long-term branding of your country's a safe place to keep your money, that stops you from diversifying. The same way that the fact that I've seen Coca-Cola advertising everywhere I go since I'm 6 years old stops me from drinking RC Cola. It stops me from drinking Pepsi. You look at my refrigerator right now, like Warren Buffett, I got a couple, mini Coca-Colas, mini Coke Zeros. I'm brand loyal. I hold a small stakeholding in Coca-Cola as a stock. It's a brand. That's why I own it. They've got a moat to a large extent. But you know what? Eventually you better realize a brand is just a brand. And when I was born in 1984, the U.S. was labeled the best place to be born, and I'm sure that's the world Warren Buffett's thinking about. But, Warren Buffett's also, I think, managed to be successful by being on the side of politicians who want to take more of your money, because to him, it's all kind of funny money at this point. But if you have $10 million, it's not funny money. If Elizabeth Warren or the squad come in and put on a new wealth tax, and they're talking about it yet again. I'm hearing talks about wealth taxes in other countries. If you got $10 million, they're going to try and take 200, 300 grand from you, especially if you don't have as much of an income as you used to. That's going to hurt. So maybe diversifying not only where you live or having the option to live would be a good thing, but diversifying where your money is, diversifying your currencies, diversifying the countries that you're in, that's good. I have, as part of my fund, not the growth stock fund, but just the more stable, make sure you always have some money fund, a number of bank stocks, insurance companies, things like that. I'm much more bullish on those in up-and-coming countries, in places in Asia, for example. Georgia, we talked about, the Bank of Georgia, TBC, have been good performing stocks. And by the way, so is JP Morgan Chase. But I think that long-term, you're seeing a lot of banks, for example, pull out. There's really no more, global banks. HSBC is the world's worst bank, is starting to, get into more markets. They already have been for years. I don't see how some of these U.S. banks have as many growth opportunities as some banks overseas, like in Asia, where you've got so many new wealthy Thai and Vietnamese and Indonesian people. Some of them are our clients. People, $50, $100 million. They want to get second passports. They want to lower their taxes. They want to protect their assets. They realize what happens when they keep all their money in their country. And yet we've told you stories about, the safe deposit facility in Beverly Hills. The FBI goes looking for one guy's box. They just take them all. Do you get your stuff back? I think I saw some story recently. After like a couple of years, they're still like, all right, fine, we'll do it, but you got to really push us. That's not Warren Buffett's United States. That's not the world he's used to. And he got that brand, just like he still drinks Coca-Cola at 92 years old. He has that image in his head. What I want you to think about is the people in all the countries I go to, where they become more successful, they have more money. Maybe at one point in your lifetime they were communist. Maybe at one point in your lifetime they were poor. They realize this is not the place to keep all your stuff. They'd like to own real estate in their country. Maybe they love their country, but they don't trust it to do everything. And what I think you've seen, whether it's with the pandemic or trade wars or any number of things in the last 20 years, spying on your citizens, you're just a number to your country. They will happily take more of your money. They'll happily take all of your money. They'll happily find some system that makes you seem bad for having money. Joe Biden in the U.S. put out a proposal. Hey, typical, if you make too much money, you got to pay more, even though you're already paying more than everybody else. Warren Buffett may like paying higher taxes. If you do too, listen, that's fine. I'm happy to help you get a second passport. Happy to help you with your estate plan. We do that here. But you got to have your stuff in different places. People ask me where's the best place to go. There's so many places. If you're at a very high level, I think Singapore is the best place. We have good connections with banks there. It's, they often, in the best places, don't want you just to walk in off the street. Sometimes it works. Oftentimes it doesn't. I've had clients with $500 million who call up and they're kind of like, call back later. So you want to have connections to banks around the world. I think Singapore's a good one. Depends on where you live. Depends on if you're moving somewhere. Where's your residence? Where's your citizenship? There's a different thing that works for everybody. Europeans and Americans have different options. I think Singapore may be one of the best ones. If you're starting with small amounts of money, Georgia might be still one of the stand-up performers, and they've done very well. The stocks have done very well. But, what I think you should do is find some places that aren't entirely in league with your country. I'm not saying you go and you go on the wrong side of the war. I'm saying you go to places where the culture's a bit different. And I was talking to a guy recently, he's from Ireland, and I said, maybe Armenia is a good place. They're a little more Russia-focused. They're trying to get a little westward-leaning, but they're a little more Russia-focused. Now they're kind of a little more, they're with China. China's letting them in. They have some deals with Iran. Like, obviously, don't go to Iran. That's not the answer. Please don't do that. Sad to say, perhaps, but, obviously, very dicey place to be. But, for a guy like him, go to Armenia, get a residence permit, get a high-interest bank account. Have a place where it's a little bit different. Have a place where if you're Nigel Farage and your bank just doesn't agree with your political views, they don't close you down. Because in Armenia, they don't care what your political views are. Those are reasons you want to have diversification. Imagine that you're a person whose bank account is closed because they disagree with your political views, and that's the only account you have, or that's the only country that your accounts are in. Imagine if something bad happens, or the tax man thinks that you owe them money after you already paid. That happened to me many years ago, and it didn't take all the money out of my account. But they just helped themselves. According to my lawyers, illegally, the state of California, they just reached in and took money out of my account, thinking I didn't pay my taxes. The 1 year I lived in California, turns out I had paid my taxes. Didn't make a difference to them. I still had to call and get shouted at. Wouldn't it be great to make sure I had some money somewhere else while I called and fought with California when I did absolutely nothing wrong, but they just, hey, we could just take your money, so we do. We could go on and on and on. This is why diversification makes sense. You want to have bank accounts in different places. If you're into Bitcoin and crypto, I might want to have some stored somewhere else. If you're into stocks, I don't want to just buy stocks in my own country. I want to take advantage of investments all over the world. Now, sometimes the bank account helps you access those extra stocks that you can't invest in where you live. That Singapore bank account will open up new opportunities that may not be available even in a very international brokerage account. So it's banks, it's stocks. If you're in bonds, it could be bonds. You might already be investing internationally if you're in bonds. If you're in crypto, perhaps diversifying that physically. You want to be diversified geographically because you have more and more governments. If you're speaking English, probably where you're from, they're going to be looking for ways to come after your wealth. And if you're in Bitcoin, you think that you're going to somehow avoid the billions of dollars, euros, pounds they're spending to find you and make sure you're in compliance. I wouldn't want to live that way. And we certainly wouldn't take someone who's trying to do anything squirrely as a client here. The goal is go where you're treated best. You want to find places where your money's safe. You want to find places where you're safe. We help people legally reduce their taxes, get second residences and citizenships. They have other places to go. Those residences and citizenships often, not always, but often create new banking and investment opportunities. Certain citizens can buy certain properties that non-citizens can't buy. Agricultural land, for example, might be something that you want to buy if you're concerned about that. Much cheaper in some countries, but even just, stock market, easier to access when you're a resident in some places. More investment opportunities. And we help people with asset protection. It's legal. There may be forms to file, particularly if you're an American. But we help people do all of that. You can go to nomadcapitalist.com/apply. If you've got $1 million or more, we'd be happy to help you. But let's not live in the Coca-Cola world where we buy into the brand of the country that is untouchable, because the veneer's been coming off a lot over the last year, 5 years, 20 years, throughout my entire lifetime. But the brand stays. Brands die hard. That's the moat that companies sell you. So we've got a brand. Get over the moat. Don't believe in the brand of your country and make sure that you're diversified.